So RRKABEL just dropped some huge numbers. I mean, profits are through the roof. But, and this is the interesting part, it's not the whole story. It's really a tale of two different businesses moving at completely different speeds. Let's dig in and figure out how they pulled off these record-breaking results.
All right, first up, just look at this number. 105.8%. That's the year-over-year jump in their operating earnings, their core profitability. They more than doubled it. I mean, wow. A number like that tells you right away that something big is going on.
And, believe it or not, it gets even better. Check this out. Their profit after tax, it's shot up by almost 135%. 135. When you see numbers like these, you've just got to ask, what's happening here? So yeah, these two figures, they're the reason we're doing this. Explain.
Okay, so let's zoom out and look at the big picture. Because these numbers aren't just good. No, this is a genuinely record-smashing performance for RRKABEL. We're talking about an all-time high.
And this wasn't just some one-off lucky quarter. Nope, this performance actually led to the best half-year for revenue in the company's entire history. That tells you there's real momentum building up, and the core of the business is just rock solid right now.
So that naturally leads us to the big question, right? What's the engine driving all of this? I mean, where is all this incredible growth coming from? Let's pop the hood and see what's really going on.
Well, here's your answer. The engine room, the heart of RRKABEL, has always been its wires and cables business. And right now, that engine is absolutely roaring. This is the part of the company that is just crushing it and carrying the whole performance. And this is a perfect look at what we mean. You've got everything from the kinds of wires you'd find in a new house to these massive, heavy-duty industrial cables that literally power our infrastructure. This stuff, this is the backbone. This is the real physical product behind all those crazy numbers we just saw.
And here it is, plain as day. Look at that growth. A 22.3% jump in revenue for this single part of the business year over year. I mean, that's huge. That's where all that explosive profit we talked about at the beginning is coming from.
So here's why this is so important. This business is plugged right into the biggest economic trends out there. Just think about it for a second. Every new apartment building, every new highway or bridge, every solar farm, they all need tons of this stuff. RRKABEL is basically riding this massive wave of demand.
And get this, because this part's really important.
This huge revenue jump wasn't just because prices went up. No, they actually sold 16% more cable, more volume. That tells you they're not just benefiting from the market, they're actively winning it, selling to everyone from local builders to massive corporations.
Okay, but this is where the story takes a turn. Remember how we called this a two-speed quarter? Well, that's because while the wires and cables business is flying high, another major part of the company is, well, it's telling a very, very different story.
Wow, I mean, this slide says it all, doesn't it? On one side, you've got wires and cables just soaring up more than 22%. And on the other side, you've got their FMEG business, that's fast-moving electrical goods, and it's actually down almost 3%. This right here, this is the two-speed story in a nutshell.
So what exactly is FMEG?
Well, think of it as all the stuff you'd buy for your home. Fans, lights, water heaters, that kind of thing. It's a totally different ballgame from selling industrial cables. This market is all about what regular consumers are feeling and buying, and lately, things have been a bit tough on that front.
Now, to their credit, the company is being totally upfront about this. They're acknowledging the softer demand, as they call it. But here's the thing. They're not panicking. Not at all. They have a clear plan, and they're focused on getting this part of the business turned around.
And here is that plan. They've actually laid out a timeline for us. They're seeing a slow recovery coming in the second half of the year, and they've set a very specific, very public target. Get this FMMG business to break even by the final quarter. That's a bold goal, and definitely one to keep an eye on.
All right, so that's the picture right now. You've got one powerhouse business basically carrying the team, while the other one works on a comeback. So what's next? What about the future? Let's take a look at their game plan for growth.
First things first, let's see where the money is coming from. About 73% of their sales are right here in the domestic market. But look at that other slice. 27% is from exports. That's a pretty big chunk. It shows they have a real global presence, which is smart, because it means they aren't putting all their eggs in one basket.
And this is how they plan to keep growing. They are not resting on their laurels, that's for sure. They're plowing a huge amount of money, 1,200 crores, into expansion. A lot of that is going into the really profitable high-voltage cable market.
And they're looking abroad, too, pushing harder in Europe and the Middle East, and even gearing up to get back into the US market.
And if you want to know how they feel about it, just listen to this. The company's COO, Rajesh Jain, basically said, "You think this half was good? Just wait. The next one's going to be even better." Now that is some serious confidence coming straight from the top.
Okay, we've covered a lot of ground, so let's boil it all down. What are the key takeaways here? What are the main things you should be watching going forward? Let's do a quick recap.
First number to remember, 18%. That's their target for how much more they want to sell each year, their volume growth. It's a super ambitious goal, and it shows they really believe they can keep growing and grabbing a bigger piece of the pie.
And the second number to watch, around 11%. This is their long-term profitability target for that core wires and cables business. If they can hit that number by 2028, it means they're not just selling more, they're becoming a lot more profitable at the same time. That's a huge deal.
So really, it all comes down to this. The whole two-speed story is simple. Step 1, you've got the core engine, that wires and cables business just firing on all cylinders, driving these incredible profits. And step 2, you've got the turnaround project, the FMEG side of things, which is struggling a bit but has a clear comeback plan.
And that leaves us with the big final question, doesn't it? We know their main business is an absolute powerhouse, no question there. But the real test, the thing that will define their future success, is this. Can they fix that consumer goods business and turn it from a drag into another powerful engine for growth? That right there is the story to watch.